All right. Hi, everyone, and welcome to the TimingResearch.com crowd forecast news for April 7th, 2025. We are recording this at 7 p.m. Eastern Time, and this is episode number 472. My name is David Cosmeter. I'm the creator of TimingResearch.com, and today I have arranged for Mike Pisani and Dave Landry to join us as this week's expert panel, and the option professor is back to moderate, and I'm going to go ahead and turn it over to him.
Okay. Okay, guys. Great to be with you here. We have an exciting show because obviously the markets have been very exciting on the downside. I was disappointed today, though. I thought we were going to see history. If the S&P had dropped 4% today, it would have been the third day in a row of 4% drops in the S&P, and the last time that happened was during the Great Depression. So we missed a historic moment today, and I think maybe many people are probably happy about that one. But let's see what's
I
going
thought we
on.
did that
Uh,
going into Black Monday.
no, I just read it somewhere. Now, I
Okay,
can't
I thought
verify
we had
everyone.
3 days in a row of down 4%, then we had Black Monday. But you might be right, Dave. Maybe
Yeah.
it wasn't quite 4%.
Wasn't yeah, might have been not 4%. I just thought that stat kind of encouraged you to think that we might be near a low when those are the stats they're mentioning. You know what I mean? Anyway, let's talk about what's going on. I mean, that's not you don't hear those news reports at the top, right? Okay, so let's talk. We got Mike Pisani here and Dave Landry, and we're going to get your guys' views on things. So we got the S&P up here now, and we had obviously a nice little bounce off of 4,800. Let's start with Mike. Mike, what do you see here, and what's your feeling?
I think we're in a holding pattern. Futures are up 1% as we speak. Now we're into it. Uh, I think we were very oversold coming into today. We were just, we were just way extended down, very oversold. I saw people calling for a Black Monday on Friday. I'm like, why? You need to have a reason. That could have been Europe, but Europe punted till Wednesday. Tomorrow is going to be an interesting day because tomorrow is China's day to respond to the White House's ultimatum. And if you're not paying attention today, the White House issued an ultimatum to China, uh, drop your tariffs or we're going to put an additional 50% on you.
You
That
mean the
is
50% on top? Hold it, the 50% is on top of whatever they were going to do on Wednesday.
50% on top of the 53% that's already on since he started. So
Okay.
that would bring us over 100%, right? We'd be like 100 something percent.
Yeah.
That to me is the scary part here. When I look what's going on, you watch this, the market's big bounce today came on a what turned out to be a false report, although I think it was actually put out there for a reason to see how the market and people would react, that the administration was going to pause tariffs for 90 days. The one thing I struggle with here, David, is that, supposedly 50 plus countries are trying to negotiate. Now, I believe 50 plus countries have reached out. I don't believe they're trying to negotiate. I don't see how they have the bandwidth to negotiate with 50 countries at once. And it's not any administration wouldn't. So it's not just them. So I'm thinking that a pause here would make sense. This is what you're facing. Let's talk. So I think we're kind of in the kind of in the shooting gallery for the next couple of days. You got China, then you got Europe's going to retaliate on Wednesday, whatever that's going to be. And in the meantime, the administration is trying to soften their stance a little bit. We're willing to talk now. They weren't willing. Now they're willing to talk. The market, I don't see a quick bounce here. When people talk to me about this, we're now in a bear market, right? The IWM, the Qs, and now the SPY, and I believe the Dow hit it today too, have all gone into a bear market. That means we're down 20% from the highs. I don't see a V bounce here. People keep talking the Fed. The Fed's not going to step in because of what the administration is doing. They're not going to step in for that. So I think we may get a bounce. We could bounce nicely a little bit. We could bounce another 10% from here and still not change what's going on in the markets.
Dave, how do you feel? Do you feel similar to that, or what are you thinking?
This Dave. I think that everything I do is technical, and I'm actually learning. I'm sitting there going, "Oh crap!" So I'm learning things from this presentation. What's kind of scary is, are we going to share charts later, or is that now?
Yeah, show them now because you have your own way of looking at things. You've got your own lines, and I was asking David, what you had a special word for certain kind of. You have your own system a little bit. Why don't you mention it a little bit? You know what I mean?
You can
Yeah,
share your
let
screen
me
now.
get this. Yeah, let me get this shared now. One thing that's kind of interesting is I've been putting out quite a few tweets, and I'm a 100% technician, so I try to avoid the news. Obviously, I'm getting quite a bit through osmosis, and I don't know if you see the screen. Are you seeing my screen now?
I do.
Yeah, I can see it.
Well, one thing that's kind of scary is if you're looking at what I call Landry light, and that's the highs are less than the moving average, like a gap between the high and the moving average for the downtrends, and just the opposite for the uptrends. And if you look at this chart, this is something I tweeted out earlier, and we've had up to 70 weeks of downside Landry line. And if you go all the way back to the depression, it was over 100, 122 to be exact. And this is a kind of analysis that gets a little scary. We've had one bar below the high below that 50-week moving average. And if I could switch screens here really quick, you can see. So this is the first high below that on a weekly basis, below that 50-week moving average. So that's a little scary. Shorter term, there's some interesting things happening, which hopefully might turn into something longer term. But if you take a look at, and let me just try to jump real quick if I could do this on the fly. Okay, so you should be seeing the VIX right now. Now, the VIX only matters when it matters. When it's stretched 10% or more away from the 10-day simple moving average, you tend to have a reversion to the mean move in both the VIX and in the underlying market, obviously the S&P 500 in this case. Now, we're stretched over 100% right now, which is, as you guys were alluding to earlier, actually just saying, this is a super duper oversold market. Now, I think it could be the mother of all bounces, but that's it. That's more of an intraday play. I wouldn't rush out and buy it other than intraday trade. And you guys were talking about earlier, right before we went live, about going about drinking because of the market. And it's like, today was a day where I was counting my money and then everything reversed, it just all evaporated out of thin air. So that just tells you what kind of crazy market it is. Just real quick on a longer term basis, if you take a look at this weekly chart here, this pink zone at the bottom is a 10% line. And I have a system where if you close below that 10% zone and you're also below the 50-week moving average, that would be a sell. So we got a sell signal on Friday. Now, when I designed this, a little bit too many details. When I designed this, I didn't realize this was a calendar chart. So technically, earlier in the week, it triggered, but the original research was done on the calendar chart. So I got out based on that particular signal. So um, if we have it kind of feels like a spike recovery, like we'll have a spike recovery right now, just because of the magnitude on the short side. But on the other side, to talk out of both sides of my mouth, I've never seen anything, or certainly don't remember anything such big slides. You guys were talking about the 4% down days in a row and all. It's just been kind of crazy to the downside. So I think we're due for a bounce. But other than intraday bounce, I wouldn't get too excited about that. I am short several stocks in here in the model account and my own account too. So for now, I think the downside, I think we still have more downside, but I think we're going to have the mother of all bounces. Now, just to kind of close the loop a little bit, I think that if we do have that bounce, it's what
What is the
happens.
mother of all bounces?
What were you saying earlier? Like, I mean, geez, I
I
haven't
said
really
10%.
calculated.
So
Tip, I
I
don't know if I don't know if we'll do 10% in one day, but I think we could easily see 5 or 6%
we did
up.
9% today off the lows.
Oh, from low to high? Okay,
Yeah.
well then that was a pretty significant bounce, and we're still oversold. So yeah, it's so funny because it's like you don't realize, and I took like minuscule positions today compared to what I normally would do, and I still got burned on it. It's amazing how I haven't fully wrapped my head around the volatility just yet. It's been absolutely crazy. I mean, it's been nice on the short side, which that has its own problems, as you probably know, well, as you do know, of course. But it's the volatility is just really crazy. So if you're not shorting, and you're not taking maybe an intraday bounce, you might want to stay out the way. But just to close the loop, I think what happens after that bounce is that's where it could get a little scary. If we roll right back over, then it's kind of like, well, we might have some bigger problems.
Hmm. Did you guys notice that the 4,800 mark was also the former highs of 2022, and the market almost looked like it was like a rocket going there, meaning it had to go there for some technical reason, and rather than taking 2 months to get there, they decided to do it in 48 hours.
Yeah.
And after it hit that high, that's why we bounced, right? Technically, I mean, I would say technically that's why we bounced.
Yeah.
You didn't see the 4,800 on the 2022
I
highs,
I saw it.
ballpark. Yeah.
I saw it. I'm a big technicals guy. I
Yeah.
find technicals in markets like this are not great. They're good for places to find a reshort or where resistance is going to be, but the VIX just hit 60 tonight. 60.
Yeah.
You're in rarefied earth there. Look, if you go back and look at 20 years, it's very rare we get a 60 on the VIX.
Right.
Uh, um,
Well, one thing with the VIX, just real quick, and I'm sure you guys know this. I find that relative levels are more important than absolute levels, and that's why I had
Yeah.
that moving average in there to show you the distance between the moving average and the VIX. And you see a lot of people say things like, "Oh, if it's above 20, it's bullish, or below 20, it's bearish," whatever the case may be, or just the opposite. But I find it's more important to watch the relative levels. But yes, the relative levels become absolute levels when you get at a number like 60. So I hear what you're saying on that. I'm just kind of throwing in
I,
my 2 cents on
so
how stretched the VIX is.
to keep politics out, because I really don't think politics helps in any way, and I try to, but the market is literally being held hostage by one man at this point. And what he
Policy drop.
decides,
Yeah.
yeah,
Yeah.
what he decides will determine where we go. And how this plays out is hard to tell because typically, if like in the financial crisis or back at COVID, right, you can look at the underlying everything else going on and say, okay, this is what could happen, this will go. This is tough because you're trying to understand something that is not easy to understand because there's not a lot of rationale behind it. Like if you
What
look at this administration, you say, what are they absolutely looking to accomplish? It's not crystal clear, you know,
well,
No,
and
it's
that
definitely
I
not.
try to,
It's definitely not.
right. So
yeah.
how do you
It's a
figure
joke.
that
Yeah.
how do you figure that out, right? And again, I'm not so how do you figure that out? And that's what makes this tough because the Fed's not going to step in. The Fed is like, hey, you did this on your own. Good luck, right? So
Well, just
yeah,
to, just to take a step back and to fear monger just a little bit, and I hope we're not there. It's kind of a long story, endless. But years ago, someone in the financial industry, he was running a hedge fund, shut it down. He was moved across country. He asked to stay at my house for a couple of days or a day or whatever. Forget the exact whatever. But he was so worried about the state of the markets and all. And this probably was 15 years ago because there was all this spreading going on and leverage and everything. And like I told my wife, he's right, but early. And then you had all these artificial low interest rates forever. And then you had program trading and all this leverage in the system and all these different things happening. And what concerns me is the market's using whatever's happening now as an excuse to bail out. And then there could be, and I know I'm confusing the issue with facts, something I preach not doing, but bigger picture wise, that's what's the saying? What keeps you up at night? So that's kind of the what keeps me up at night
well,
is there something bigger here through all the artificial markets we've had for so
well,
long?
let's take this away from the administration, right? We and talk about what else has been going on. And for me, the consumer is a bigger problem that's been going on for a while. The consumer has been weakening. They're straddled in debt. When I see earnings reports from Restoration Hardware, and they're basically saying that, people who have money are no longer spending money. What's that tell you about people who don't have money? They are strapped. So that's going on. And now we're about to go into earnings season starting Friday with the banks. I mean, you want to talk about cover here for every CEO to just basically say, I can't guide. I'm not offering guidance. We can't tell what's going on. Or to throw every bad thing into this quarter to basically sandbag. I mean, I always look for what's going to drag us out of this, right? What is the catalyst to take us out? And right now, I can't not find one unless the administration does a 180 in it. I don't see that. Just my
Even a
2 cents.
moderation would be better, though, Mike, right?
Yeah,
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 even a moderation would be fine. Now, listen,
yeah.
you made a lot of good points that I think the listener should definitely hear. One, we hit 60 on the VIX, which we all know is ridiculously excessive. We also hit 4,800, which was the former high points. If you notice some stocks like Broadcom and Palantir, they went down to some former highs and had a nice big bounce before they went in the toilet. So this 4,800 number, I think, is huge. And it's really a line in the sand that could mean what? We are either going to what? Take that out. And that means the tariffs aren't going to come off. And that means we're going to have a real big problem. Or it's going to be the low. And you're going to see moderate talking of some degree that's going to get people think that we're not going to have this total trade war. So I think 4,860 on the RSI VIX today. I mean, I got those as pretty big numbers. Did you guys
But
see anything like that, or can you? What's your feeling on that kind of statement?
I talked to my members today, and I did not buy today. I was buying a week ago, a week and a half ago, a little bit, nibbling. Um, I am of the opinion if you want to buy here, you buy 20%. Again, I don't think we're coming out of this in a V bounce. I don't think we're rocketing
No,
back up out of this. So,
I think that's 100% correct.
so if you want to start
Yeah.
buying because you don't want to miss the bottom, and you never try to catch the absolute bottom, right?
Mm-mm.
Maybe the bottom is in today, but doesn't mean we're going to rocket out of here. So maybe you start buying a little bit here. If you have deployed 20% of your cash, and if it goes down lower, you buy more. Do not buy options here. And I will, as an option trader, I will tell you right now, I told all my members today, do not touch options. With the VIX this high, option prices are 3 to 4 times higher than they're supposed to be. And when that VIX comes in and the implied volatility comes down, you're going to get crushed. Options are not the way to go here.
Yeah, I had I wish I had somebody to call upon today because it's like I have options that are fairly deep in the money that I rolled down once before, and then looking to roll them down today, even when we were off quite a bit, it's like it just wasn't worth it. So I've got to sit there and watch them retrace, and I didn't want to get too complex because I'm trying to maintain a position for the model account. But it's like, what do
What
you
about
do when
spreading it? What about spreading them out? Meaning, if you can't roll them down because the next roll down is too expensive, that might be telling you to write those options against the ones you own and at least
So,
bring cash in there in case there's a rally.
so I don't
well,
have
like
any
just
covered. I don't have
go
any
ahead.
cover
I,
calls here, but I had a couple members telling me their cover calls are not working well because even though the market's
oh,
dropping big, the implied
yeah.
volatility is going up so much. It's just they're not.
Well, they still
They're
got time on the clock, and the thing could swing the other way. The
well,
covered call is not going to get deterioration until it gets very close to the end in this market.
well. What I said to them is that you have to wait for the market to rally. That's when the implied volatility come out, and then they'll start to show the true colors. But right now, they're not happy.
No. But on those puts, Dave, did you think about that at all? Like when you got a big put,
Well, I
maybe
yeah,
maybe spread them out and then at least grab some cash that's underneath the market because you don't want to roll
well,
down and
that's
pay that cash.
yeah. I didn't want to complicate things too much. I also like
I
to
got you.
keep
I got you.
yeah, and then I also like to keep. I did think about that, but the other thing is that because then I was kind of thinking, well, do I do a spread and then get some further out? But and then it gets complicated. But I like to try to keep
Yeah.
a position to where it could be open ended. And these puts I put on as a substitution for shorts because I recommended
Right.
outright shorts. And then
Right.
you go into markets and we're shorting JBL, which is a $150 stock. And it's like, well, that's 15K margin per 100 shares if I could go in and get a deep in the money option for not a whole lot of money. And that's the thing I learned today too, or relearned, is that the when you get that deep in the money, even though the option prices are expensive, you have very little extrinsic left on that deep in the money option. So um anyway, just try to keep it simple and that's where,
Yeah.
you're probably right though. Maybe in hindsight for sure they would have collected some money on that reversal, especially when the implieds come off like they can when they're that
Yeah.
absurd. So I hear you.
Well, that's an alternative you and me and Mike would think of, but the average Joe who's out there trying to trade options, he probably wouldn't get that in his brain that fast. So that's one of the
Yeah.
advantages of people trying to hit us up for some education. You know what I mean?
Yeah, yeah. A lot of moving parts
But
in those options.
now, Mike, you're a VIX guy. I'm going to put a little number out there for you. We had about a low breakout on the VIX around 25. We ran up to
Hmm.
60. If I take 61% off of that, I come back to 40. Now, 40 was the intraday drop here after it rallied. So I'm thinking out loud that the VIX had a 61% retracement of its move. So now the VIX may go back up, which means we may go down and get a retest of the 48, 4900 area. Or if they take out the 40 level, then that might tell you the lows are in, and now the VIX is going to come down into, like I say, a more digestible area. So, do you think the Fibonacci pullback on the VIX might be a worthwhile thing for people to keep an eye on, that 40 number?
So this is, again, we're in a headline-driven market, and I
Yeah,
don't think technicals matter as much. And I'm a technical guy. I post charts every Sunday for the most part for everybody for free, right? I put them on my
yeah.
Twitter feed or X feed, whatever you want to call it these days. I just think you're in a market that's driven by headlines, and that's just tough because,
Oh, yeah.
what if okay, somebody asked me today what my worst case scenario for China was, and then I had time to think about it and I came up with a better one. What if China went out tomorrow and just surrounded Taiwan, didn't invade it, but just cut it off? Well, how much does that screw the United States with all the chips now? Everything, all that technology suddenly lost, can't get to it. I mean, China has the ability to do a lot of different things here. So when you look,
That's their trump card, though, right?
yeah,
That you think that's their trump card is obviously do some disruption to tech and
yeah,
maybe do some expelling of people that they don't need. They don't really need
well,
Apple in there. They
well,
already got phones, you
what if
know?
they say tomorrow, Apple, Tesla, Starbucks, McDonald's, you can no longer sell in
Right,
here. You have to be gone in 30
right,
days.
right.
We'll manufacture for you, but you can no longer sell into our population.
Yeah,
So the to your back to your point, I don't know. And I
yeah,
I'm never afraid to say I don't know. I don't know. We're in such a headline news driven environment. It is so difficult here. And
yeah.
that's what I say, like, you want to buy a little bit, buy small. Don't go all in. What I hear is I'm going all in. I'm like, okay, good luck.
Yeah.
I hope it works for
It's
you.
aggressive move. Aggressive
Yeah.
moves can be very good or very bad. It's an aggressive move. Yeah.
Yeah.
Just for the record, a naval blockade is technically an act of war. So if they did
But
something like that,
but it's against
Well,
Taiwan, and if they're not in range, I mean, so what is the United States going to do about it? They're not going to go in and fight them,
they're not going over there. They're not going to go over there.
right?
Yeah.
I mean, honestly, if you actually watch the troop movements in the U.S., we're moving everything to the Middle East.
Yeah.
You guys are
I,
depressing.
Well,
I,
it's such
I
an unknown deal. I mean, the guy,
Yeah.
the guy comes out and he starts talking like Besant rather than Lutnick and Navarro, then we're going to rally. If he keeps talking like Navarro and Lutnick and they think they're going to replace the income tax with all these tariffs and they think they're going to balance the budget and they're still drinking that liquor, then we're going down and down and down until they figure out that doesn't work. So it's really up to Besant getting in the room and talking to these people like Stan Druckenmiller would talk to them and say, listen, let's go with 10%. We'll see how that goes. And then we'll try another thing
So,
in 90 days.
so
That's the smart thing to do.
so here's what I find interesting is you're finding a lot of managers, bullish managers like Wedbush and others coming out, and they're just blasting the administration. Now, my guess is they're all in a lot of pain. So this is self-serving, right?
I'm
Kind
sure.
of like Ackman coming on during COVID and crying for the American people while he was selling all of his shorts and buying long and telling him we're going much lower from here. But it's
Right.
self-serving. But
Yeah.
it's a big change in what's going on. Remember, Trump was beloved by funds and the markets in his first administration. This is a huge change. This is a dynamic change.
Yeah, no, it's a globalization that's been going on for 80 years since World War II, and now we're going to isolation. So obviously that's a very big, big change. And that's why this market's kind of going, if he's really going through with this at these kind of levels, you know, this thing is done.
But can he?
AI
So
is, well, can he? I mean, the guy is doing it, but I
But
think he'll
but
back off. But he,
uh,
he has to get an exit that makes him okay to
okay,
go on Fox
but
News and look good. That's
okay,
what he
but
needs the exit.
sure. But realistically, if you're a company, pick one, Apple, Ford, pick any company, GM. It takes 3, 5 years to redo your supply chains and move manufacturing to a different
Yeah.
location, right?
Yeah.
So it's not going to happen overnight in
No.
like 30
No.
days. And the cost is huge. I saw,
Yeah.
I think it was Wedbush, and I always take them with a grain of salt, but they said if iPhones have to be produced in the United States, it'll be $3,600 an iPhone. Now, I think that's
Yeah.
probably
Yeah.
an extreme number, just
Yeah.
be clear. But even if it's 1,200 or 1,500, that's a huge bump.
Yeah. Hey, if
So
China wants
guys,
to play tough ball, Dave, if China wanted to play tough ball now, wouldn't this be the time to do it? Because if he does a really retaliatory and he does something like kill the tech deal or kill those guys who are over there, and they say, listen, we can take 24 months of pain. In 24 months, this guy might not be around. If we get this down to 3,500 on the S&P, he won't be able to get elected dog catcher. So, I mean, these guys are not dumb and they're not short-term traders on this. So they're already
well,
in a
the
recession.
problem with
They're already in a
you're
recession.
onto something. Yeah, you might be onto something there because and again, I'm the
Where's the
wrong
downside?
person to make an opinion on this, but
That's true.
China plays the long game more than anyone, and see
Yeah.
that's what Trump had kind of mentioned a while back that this is a long game thing, and I think it's probably a good idea longer term, but all the issues you brought up, everybody else brought up, make a lot of sense. Now, just real quick, so we were getting whacked, but the rest of the world was kind of hanging in there. So, and again, I usually don't search out for meaning or whatever, but since we're talking about it, I just pulled the EFA shares. I don't know if my share is still
Oh my
going, but
God, you don't want to look.
uh,
The
yeah. So
Europe's
what's
gone
so
into a bear market in 3 sessions.
Yeah, and
yeah.
their
So
banks,
it's
Yeah.
EUFN, their banks are totally gone, and that was their crown jewel,
Yep.
EUFN. They totally wiped off the map. It was up at like 30, 40, now it's at 25. I mean, the whole thing is done.
oh geez, wow.
EU,
So
look at
so
EUFN. Look at
yeah, I'm
EUFN.
looking at yeah, I've got it up now. So
Yeah,
so
that's what
initially,
happens when you. That's what happens. Yeah.
so we were, we sneeze, the world gets a cold, but it's like everybody seemed to ignore us at first. Of like, that's your problem, haha. But so what's happening? And again, I shouldn't confuse issue with facts, but what's happening when Europe is beginning to tumble like this? What's it's y'all have any thoughts on that?
Yeah.
Yeah, it means like we're in big trouble. It's worldwide. We got global. We got global poop hitting the
Well,
fan.
I mean, let's talk
Sheep
about
dip.
Europe. They're on the precipice. You have a continent, because that is not in agreement. Um, my my forefathers, Italy, doesn't want to do anything. Right?
No,
Germany
no,
wants to.
Italy and Spain. They just want to have a nice meal. Yeah.
Yes.
Yeah.
Germany wants to
And hey,
absolutely
there's
go.
nothing wrong with that.
No, no.
Germany and France absolutely want to go the China route and just say, let's F them to the nth degree.
Yeah.
Honestly, I think that, you know, okay, if the world was to call him and just keep going after him, at some point they're going to have to call uncle, because here's the problem. And again, we're touching on politics, and I try not to go too far there, but right now Trump has complete support of the Republican Party. But the midterms, they're far off, but they're not that far. And boy, these representatives, right? These they'll start in the House and the Senate. They'll start paying careful attention, and as soon as some of them start peeling back their support, that's when all hell breaks loose.
Oh yeah.
And if you're a foreign country, that's all you're trying to wait out.
Okay, I got knocked off for a second. The question was, or now that they're feeling the pain, because at first it was just us, like, haha, you guys are getting creamed. Now is it like, okay, we're getting hurt too. Our people are going to be getting to complain all of a sudden. Maybe we should do something.
Maybe, or they'll just say, "Listen, we're all in the bad soup here, and we've got a villain named Darth Trump, and we're just going to blame it on him." Could we look at the weekly going back on the S&P? Because my feeling is the
Oh,
longer we
well, we put
stay
a
under
52-week
50,
low in today.
yeah, of course we did.
Wow. Yeah,
But
yeah. I knew
what?
like
Yeah,
the
there's the
net
monthly. You
price
see,
change.
I mean the weekly. The longer we stay underneath the 5600 area or whatever, that line's going to start turning down. And if we break the 4800 level, and this thing turns down, that's when I think it becomes more of a
Well,
long-term problem.
I'm assuming that orange line is the 200-day.
Yeah,
That's not
Probably.
my
it's
chart
200 EMA and 50 EMA.
on the weekly.
Yeah.
That's a big
Yeah.
spot. Look at the last
Yep.
couple times we've been down there.
Yep.
That's a
Yep.
huge spot.
That's it. So if we break there,
Well,
you know it's going to be a long-term problem. You know there's a recession. You know there's going to be structural problems if that breaks.
And
well,
not
what?
just for a day or two. We're talking a break.
Oh no, yeah.
Yeah.
Not like it did over here in
Yeah,
2020.
yeah,
But
exactly.
that was yeah, but that was COVID, and COVID's going to go away because it's a virus that comes and goes. If this thing is underneath the gold line because global trade is frozen and Trump sticks with the America only, maybe then it would be more serious than COVID. You know what I mean?
Yep.
Well, one
You know?
thing from a technical perspective, when a market drops really fast, people don't have time to react, and and then
Exactly. Yeah. Yeah.
they kind of don't want to, and
Yep.
that's when you can have those great, fantastic V-shaped recoveries, fantastic.
Right.
Yeah,
As
but
soon as you get fully short,
those were always based on the Fed for the most part.
okay. So
Good
except for the
point.
COVID one, obviously. So the thing is,
COVID was definitely the
Oh, no,
Fed. The
totally
Fed
fed. They had
stepped in
yeah, they
huge.
bought everything. Yeah, they bought junk.
yeah.
They bought everything. Yeah,
Well, then they also gave everybody money, and then the
there you
Robinhood
go.
accounts quadrupled in
Yep,
assets, and
yep,
it was
yep.
crazy. But the thing is, the longer people have time to think about what's going on and open their statements and everything else, what shocks me, just as a side note, it shocks me how little time people spend learning about markets and learning a little bit about the money in the markets, and I could teach people in 10 minutes, a lot of what you need to know. Like every now and then the market loses half of its value. And a lot of people don't know that. But I've seen
Right,
quite a few of them,
right,
and you guys have seen
right.
a few of them too, I'm sure. But,
Yeah.
you know, but I do think that the quicker the recovery, the less people are going to be forced to sell. But you put a lot of the fear mongering on top of it, like, well, everybody's kind of burdened from the inflation and everything else that we had that was so bad. Then eventually they're going to start needing that money, and that's what scares me. I think
Can you
the
put up
most
an
about
intraday
this.
chart? Perfect. Zoom in to today. Just
It's
the whole
going
entire
weekly, I
day.
Oh,
Take
think.
it from the gap a little bit more. There you go. A little bit tighter. There you go. I have a theory. So Thursday we had big margin calls. On Friday was the largest margin call since the beginning of the pandemic. And
Wow.
this morning when we were down, we were staring into the abyss at another incredibly massive margin call. When guess what broke? 90-day tariff pause.
Oh, right.
Right.
Yeah.
I wonder, was that done on purpose to stop this, to save some of these hedge funds who are in deep trouble? Now, why they haven't fixed this, and gotten out and done anything about this is beyond me. But like, there was almost no margin calls today. That's because we were green at 11 o'clock. It's funny that.
Oh
It,
no, it's not coincidental. These things are all done by design. But it does. This chart does give you an idea that if we did get a nice bounce, filling the gap at 5,400 would be your minimum target.
mhm.
Let's get into stocks because you're getting too late. I want to hear some specifics. I think we beat up the old what's going to happen next. Let's go on to what stocks look good. So I'm going to start out with Dave and let Dave get a couple of stocks that he
Yep.
likes or how he's trading them and how
Well,
and then talk a little bit of what you do for people. Yeah.
okay. On the short side, we're short CCL. These leisure stock. Here's the thing. This rollover happened months ago, and I'm sure you guys saw it too. And I had a hard time on the long side. I got raked over the coals a little bit because I had the last few longs I had did not work out. But that was the kind of market we were in. Although it looked like it was going up longer term and it was kind of all over the place. But if you want, I could share my chart back real quick, and then
Yeah,
oh
please.
my
Yeah.
yeah.
That's why I wanted to see some of the stuff you're working on. Yeah.
Yeah, let me get to the
And
screen
then you
share.
have a
Keeps
couple
me
of
going.
technical things that are kind of unique to you. I forgot exactly what they're called, but you're going to remind us.
Okay, yeah. For instance, the bow ties, and that's just simply a 10
That's it. That's it.
simple,
That's the one.
yeah,
Yep.
a
Yep.
20 exponential and 30 exponential moving average. And when that happens off of all-time highs, like it did here in Carnival CCL, so we got short right around here. And believe me, the short side is usually not this easy. This is the easiest shorting we've ever done. And the problem is you can't get too aggressive because you do have those spike recoveries. So we're only short three stocks. We're short Carnival. I think it's too late there. We're short JBL that I mentioned. And that's another one of these. You see the bow tie there, nice little rollover from that and going from up. This is just uptrend proper order, 10 greater than 20 and 20 greater than 30 to downtrend. And it goes from green to red and it's yellow when one is not in order. But once they all get in order, again, it looks like a bow tie. So that's a great little transitional type of pattern. And then, I mean, if you're more shorter term oriented, you can watch a 30-minute or hourly or whatever's your forte. In these stocks, these shorts are bouncing a little bit, so we're going through that painful retrace. And then we're also short TPR, and the pattern there was similar to a bow tie. It's a pattern I call a first thrust. We have a big thrust down from highs, and then you have a little bit of a pullback. And you can see we took a little pain on that one, but that one worked out. We hit the initial profit target. The only thing I'm seeing on the upside right now, and it's been a tricky market. Let me just show you something real quick. Like take a look at drugs, and then defense would be another area. Drugs was one of the few areas that's hanging in there. And that's the dangers of buying relative strength in a bear market. People say there's always a bull market somewhere. It's like, well, remember Caddyshack? No, you don't, Danny. It doesn't always work that well. So drugs is one of the few areas. What's defense? I forget, ITI or anyway, defense was another one that was actually at all-time highs just a few days ago, and then it absolutely imploded too. So there's not a whole lot on the upside. Gold, the commodity, is looking okay, but it's begun to pull back a little bit. I'm still kind of bullish on gold, but another down day like today, I think would eradicate that. The gold stocks actually are looking a little bit better. If you take a look at GDX, but that's getting hit pretty hard too. We're back to where we pull back. So I have one gold that is a potential for tomorrow, but I have a very high entry on it, and that in and of itself hopefully will keep us out of trouble. So there's really not a whole lot to do right now other than sit on your hands. If you have any leftover longs, you obviously probably weren't using stops. And I'm not saying that to be Schadenfreude, but here's the lesson for next time this happens. So just not a lot out there. I don't know what you guys are seeing, but that's it from my standpoint.
What do you got, Mike? As far as what do you think things are happening? You got some stocks you're looking at?
So,
Mike, do you want to share your screen?
yeah, I guess I can do that. Share. Oops, nope. Whatever you did, just screwed it up. There we go.
Okay, it's
Guys, see my
loading. Okay, I see it now.
perfect. So, I've been long Amazon since around 200 bucks a share back in here. Let me pull this up so you can see it. And what I did is I sold a ton of it up into the highs. I was trimming all the way, and I added a little bit back into the bounce a couple weeks ago. I'm looking to add to that because I like their story. They are the next big AI company. They're not going away. AWS, they're not going anywhere. And I would say this, you want to buy quality companies. So when I see people saying, I want to own SoFi, I sit there and I go, why? It's, what is such a good thing about this company that you want to own it? So for me, I want to own big companies. I want to own NVIDIA. NVIDIA, yep, problematic. You have this big mountain trade. We've closed that down, but NVIDIA is still the best company in AI and still the one to behold. I want to own a company like that. A company I do not want to own right now is Tesla. And it hurts me to say that because I trade Tesla almost every day. And the only catalyst I can see coming for Tesla in the near term is Musk returns, leaves Doge in the next week or two, and comes back. While I do believe it's a vision play, and if you believe in robotics and AI and the robotaxi, it could be great. The EV component of it is in deep trouble. And so, when people tell me Tesla's going to be fine, Tesla's not going to be fine. It finally came down, finished filling this gap. I mean, you watch what's going on in China. Their sales are off a cliff. Their sales are off a cliff in Europe. They're not doing well here in the United States. When EV sales are up worldwide year over year and they're down, that's a problem. So I don't want to own a name like this. So, for me, I would focus on high quality stocks. Amazon, Nvidia is on my list. Uh, I want
Well,
something in the payments. Go ahead.
Well, Mike, one thing I was looking at earlier is if you take a look at NVIDIA, because everybody's talking about Tesla getting creamed, and you made some good arguments there. And again, I try not to confuse the issue with facts. But one thing I was thinking is like, okay, we're in a bear market, so to speak, or whatever, either technically or just by looking at it, right? And you look at NVIDIA, and NVIDIA got creamed just as bad as Tesla did, and
Kind of, yeah.
maybe there's a story there too, but it just seems like some of these big Wall Street darlings are just getting annihilated in
but
here. And
but
but Tesla has the big story behind it with Musk and everything, whereas
but the
I don't
difference is Tesla's delivery numbers were horrific. We're expecting a horrible quarter, whereas Nvidia's numbers are still golden. They're
gotcha.
they they can't make GPUs right now for AI faster than they can sell them, and they're still
Yeah.
charging
So
whatever they
so
want.
the GPUs are used for AI too.
That's
It's
what they
not just
are.
like the
Oh
The
yeah,
oh
AI
okay.
yeah,
chips
yeah.
are all GPUs.
Okay. So that's the same as like the miners, but
No,
the
these
mining
are
business
souped.
isn't there
No, these
anymore,
are
is it?
souped up. Like these are like four
Super fast.
GPUs with like like 100 gig of memory, whatever. I don't remember the number off the top of my head,
Yeah.
but they're just massive. That's what's driving this, and their numbers are great. Now, here's what would kill NVIDIA. If when we start reporting earnings, Microsoft and Facebook and Google and Amazon and these big tech companies who had $100 billion a year each allocated um, for purchases and stuff, say they're killing that right now. That would kill NVIDIA.
Oh.
But
No
they,
doubt, no
but
doubt.
they haven't done so yet.
And obviously, that's the way they're pricing the stock now. They're obviously anticipating that is going to happen. And if we're going into a recession, it is going to happen. So,
Well, I
it's
mean,
not a far-fetched idea.
how do you kill, the two quickest things everybody forgets about is that can be killed are CapEx costs and advertising. And
Right.
that
And that's going to
that
hurt the Google. That's going to hurt Google and Meta.
right, that's exactly my point. You beat me to it, right? That's why Meta's
Yeah.
getting hammered. It's not exposed to the
Yeah.
tariffs. They have no exposure to this whatsoever, right? But if we go into recession, yep, there's no more advertising, right? Same thing with Google. So, I like I like this. The other thing I'll say is I would keep an eye on Bitcoin. Um, Bitcoin to me is trying to detach itself from the overall selling of the market, and that's worth keeping an eye on. And you'd watch names like Coin and MSTR and Hood in that space.
Yeah.
Yeah, I was glad to see Bitcoin trying to catch a bid today, even though the market was tanking a bit. And my initial hopes were, and in this business you can't hope much, right? But my initial hopes with Bitcoin would be that it would trade independently of stocks, and then I could buy Bitcoin if stocks were crappier or choppy or whatever the case may be. But so the correlation there has been really high. So you're thinking you might see a decoupling. I'm kind of liking that.
Well, look at the chart on Bitcoin. Here's IBIT, right, which is the ETF.
Yeah,
It doesn't look anything like the markets. It's holding in much stronger here at this point. That's a decoupling for me,
yeah,
right? It's
Oh, this
trying to
you're talking
hold
about
here.
the ETF. Yeah.
Well, if you look at Bitcoin, it looks the same, right? It,
Yeah.
it, it just not quite the same price levels. To me, this says, okay, we're trying to hold in here, and that's worth watching because then you look at somebody like MSTR, which is nothing more than a leveraged Bitcoin holding company, right?
yeah.
Mhm.
And look at this, much nicer chart than the markets. Holding the 200-day looks decent. So, I would keep an eye on these carefully here.
Yeah, wouldn't you say though that it's setting up for a nice 1, 2, 3 formation, but really you're not going to make the big bucks until it breaks 350, and when it does that, all hell's going to break loose on the upside. So if you didn't do anything until it broke 350, the real money is going to be made on the break above 340, 350, because at that point, then this double low means it's held. You got your green line holding. So again, it definitely looks like it could be good, but this is a deal where you might be a lot smarter buying it at 350 on its way to 500 than you would be playing the prices right at 260.
I
What do you
think I
think?
would buy it, David, and I own some Bitcoin right now. I would buy it and break at that downtrend around 310.
Yeah, something like that. You're looking for some strength though.
Yes,
Yeah,
but
you want the car to be going north towards Boston. You don't want to be in the driveway hoping it gets to Boston. You know what I mean?
but in a market like this, it's extremely notable how well it's holding in.
Oh yeah, oh yeah. Plus, these guys announced that they have to take a $5.9 billion loss because of some accounting situation. Did you read
And
that?
and yes, and look at the reaction. Ho hum.
That's what I'm saying. Yeah.
Yeah,
No,
I
that
agree.
could be telling you that the Bitcoin's going back to 100, 150, like Tom Lee talks about. And if he's half right of going back to 150, this thing is a bargain, but it'll be a lot more comfortable bargain, like you say, if
Yeah.
we got above 310.
Now, the thing I would not buy here is energy names.
Oh,
Well,
energy
yeah.
looks like crap. Yeah, it looks really bad. Yeah, I
I
agree
mean,
with you
Although
on
it's
that
holding
one.
60, although it's holding 60 so far, it's holding
yeah,
60,
but
but a recession and more supply will kill the thing.
look at this
The
move in
service. Take
Chevron
a look
in
at the
four
service
days.
stocks. OIH.
Yeah,
OIH has
well,
been
they're not
pure
putting any
cream.
money into looking. They're not looking for any oil. They're just giving it back in dividends and buybacks. So if they're not looking for any oil, you don't need Halliburton. You don't need Schlumberger. You don't need
Yeah,
any of these servicing guys.
Well,
You
I
know.
mean, look at
yeah.
Chevron, 169 to 137 in 4 days.
Yeah.
Wow.
I mean,
Well,
that's just
they're thinking the oil's going to $40 a barrel, and you can't return any cash to shareholder. You won't get free cash flow at $40 a barrel.
the only thing I can hope here is that we are under the Biden administration, we depleted our strategic reserves. I'm hoping we're buying here.
Yeah, let's hope we're loading. Yeah,
Yeah, it's
absolutely.
kind of just. I talked to a guy that works on the oil patch or whatever. Well, he told me they don't call it that, but anyway, it seems like an anti-energy administration is actually better for them. It's what he was telling me. So I thought that was kind of interesting because that drives prices up, and then they're more inclined to go look for more oil. So,
Let's take a look at the Russell. Everyone's been saying obviously you got to,
uh,
even Tom Lee on the thing. He said earlier this year, small caps, small caps. I mean, the small caps look like we're going into a freaking depression almost. IWM.
the the Rusty. I said this morning, the Rusty fails to disappoint and disappointing.
Yeah, and it's very very low priced valuation, so it has everything going for it except it can't ever go up very long. Yeah, that IWM. Yeah,
Yeah, you're going to those. You're around those 22 lows. I mean,
yeah. Looks like you want to get to
that's
163
crazy.
and test that, right?
Yeah, for sure.
Yeah, when the charts all look like they're in downtrends and people wonder why their accounts are going down when you hold stocks, it's really not that hard to figure.
Yeah,
when
for
it when
sure.
it's going when it's going up like that, you're gonna like going to the mailbox every month, and when it's going like that, you're not gonna be so happy.
So it's just helping. This is a weekly chart. I was just helping my daughter and my ex-girlfriend out, and they're like, "What should we invest in?" I'm like, "Okay, put 60% of your cash into the SPY and 40% into the Qs. That's it." I'm like, "That's it." What about other stuff? I'm like, "That's it." You don't need your cash for 30 plus years? That's it.
I was
Well, this
shocked. I
guy
had a
who Mhm.
go ahead.
no, go on.
I was shocked. I had a signal in the queues with a real simple system. The one I was just showing earlier, where you're just looking for if you're above or below the 50 simple and above the 10% line. And there's a couple of more little whipsaw filters in there for the upside, but the downside, that's the sell signal. And I was shocked. I took a signal just for S and Gs and the Qs, and I bought 100 shares. And I was shocked that at one point it was up 60 something percent. And when I stopped out, even with the slide we had, the Q stopped out a couple of weeks ago. But even with that slide, I think overall I made 56% in a year and change on the Qs. And it's like, I'm Mr. Stock Picker, but I'm like, holy crap, the Qs went up 60%. That was kind of hard to believe and kind of mind-opening situation there. But I'm not going to go over to the dark side and trade just ETFs. But it did kind of wake me up that you could actually do okay in an ETF like that.
Yeah, but I mean, if you're in a retirement fund, this is, unless you know stocks, this is what you do.
Yeah.
I got a question for both of you guys because this is a good question. What likelihood, 10 being best, 0 being no likelihood, did we see the high of 60 on the VIX and the lows of the S&P at 4,800 on a scale of 1 to
Ooh.
10, 10 being most likely? Dave Landry, you're up right now.
Oh. It's like when you go to bed or you wake up and you see those futures down 200 points or something,
Oh, I didn't
I
say they're
don't
not going
know.
to get retested. No, listen, I didn't say 4,800 is not going to get retested, but in that neighborhood, let's call it the county, is
I
4,800 the
think
county of the low, and is 60
yeah,
the county of the high?
I'm gonna go out on a limb and say, well, shit, pardon my French. What did we hit in August of on that spill in August of 24?
On
The
what?
VIX was like, what did it hit?
On the VIX?
65 or
It
yeah.
hit 65. It was only 5 points higher than it is here. 5 points higher. 65. It hit
And
August
that
5th,
was
and
complete
that was
panic.
a Japanese unwind. Yeah, that was a Japanese unwind trade.
Okay. So I'm gonna go out on a limb and say I think we've seen the high in the VIX because I just don't know, and you guys know options better than I do, but I just don't know how long implieds can stay that high. And maybe they can stay high for a while, but to me, it just seems like it's really overshot here. And I'm going to go out on a limb and say that we've seen the high in the VIX. I don't know if we've seen the low in the market though.
So you got two different road, maybe a 10 on the VIX and about a 6 on the market.
I'd say that there's a 60% chance we've seen the highs in the VIX, and there's a 10% chance we've seen the lows in the market.
You've been around long enough not to put those percentages too high, right? All right, Mike, let's play it
Yeah.
again. What do you got? 60
I'm,
on the VIX and 4,800 on the S&P.
I'm going to
Where's
say
your
there's a
probability?
90% chance we've seen the high in the VIX, only because when the VIX goes up like this, it very rarely, it
Makes
doesn't move
another
the
new high.
same way. It
Yeah,
just
yeah, yeah.
Yeah.
doesn't move
Yeah.
the same way. This was
Yeah.
a
Yeah.
I
complete
agree.
panic.
I
I
agree.
would say there is a 20% chance we've seen the low in the markets, though. We can go
Yeah.
lower, but the
And if
VIX is probably not going to spike like it did here.
No, and then you'll have a divergence, and
Yes.
that'll be a fabulous time to buy. So you
Yes.
traders out there, you know what you want to be now? You got your number in the sand, 4,800. Let's see if they test it. Let's see if they take it out and watch that VIX at 60. Because if they bring it down to 4,800 or they bring it a little lower and you see the VIX is only at 52 or if it's only at 49, you've got a divergence. And then you're looking for, that's when you put your money in. That's
Well,
what I think.
here's a
Well, that's
20-year
that's a good
chart of the
point.
VIX,
Yeah, I
right?
think I think we'll see the VIX come in even if stocks kind of drift a little lower in here.
Right.
So I'm kind of
Right.
with you on that one.
Right.
Look at
Yeah.
this
That's a good
20-year.
But,
point.
Look at
yeah.
the 20-year monthly chart of the VIX. We hit 60, right? You can count on one hand how many times we've been above that,
Oh, yeah.
right? This
Yeah.
is, what do you notice? You always have these big wicks, kind of like we had here. So yeah, these are monthly charts, so right? So you have a lot of time for them to come in, but you get the idea.
Well, let me ask you guys, who is buying options at these ludicrous implieds, like when the VIX is 60 or
I'll
whatever?
tell you. I'll tell you the guy who's doing it. The guy who's selling puts, cash secured, and he's taking the premium, which he got from Joe, and he's giving it to Bill, the call guy. So he's buying the calls with other people's money. That would be one guy right off the bat. That would be a very sharp guy. If
Okay.
4,800 is the low, if Amazon just hit a low, if what do you call it? All the tech stocks all just hit their lows. You sell the put. You just told me your puts were so expensive you wouldn't even roll them down. They were obscenely large. Well, that means
Yeah.
the seller just took in an obscenely large premium, and rather than going to the bar with the money, he took it and bought calls with it. So now he's got it on both sides. His risk is
So
obviously the
he's
strike
driving up
price.
he's driving up the call, but wouldn't he be driving up the call prices too? Is that what you're saying? That the call prices
Well, I'm
are
just saying the call
pushing the
prices have to
implieds?
be no, the call, yeah, the call prices are going to be what they are because of implied volatility. But he can
Yeah.
neutralize that
Here's an
gain.
example for
But
you
he can,
today.
yeah,
The daily the daily ES and SPX options, which are usually down around 13, 15% IV, were 80s
Yeah,
to 100. I mean,
yeah, it's crazy. Yeah,
you're talking $60 an option for a day, an option for the day versus, yeah, I mean, you can't
yeah.
touch that. It's just not touch. You
Yeah.
just don't even
Yeah,
look at it.
I have a little thing I call the race to the finish I look at every now and then. And 20 minutes before the close, and it's about 10 minutes before they let you stop buying those options. I'll look at the E-mini options, and sometimes those things are like 10 points out of the money, and they're trading at 50 cents or something, or less, or 35 cents. Sometimes I'll buy just a few contracts, and it's less than $100, just because it just seems ludicrous that somebody would be stupid enough to sell an option that cheap. And I haven't even bothered looking at that in months because the implieds are just absolutely nuts.
Yeah. Well, that's why the seller can, if you know how to sell them, for a purpose, it's
Yeah,
not a bad time to look at the sell side. It's got to be purposeful and covered, either fully cash secured, and you want the stock anyway. Like Mike's talking about, I like Amazon. Well, then you maybe don't want to buy it, but maybe you don't mind buying it $20 under with a $30 premium. You know what I mean?
yeah. I
But
mean, can
we
you
are at the top. Yeah.
yeah, okay. I was just going to ask real quick, can you ratio spread when you got those crazy premiums, or that doesn't work either?
I'm not a ratio. I like you say, you don't want to put too many things in the soup. So I generally don't have too much French pastry when I trade. It's pretty much cut
Gotcha,
and dried. The
gotcha.
more legs you put on, the more decisions you got to make, and
And the
that's
Yeah,
not a
harder it
good
is
time
to
for
get
me.
out.
Yeah.
yeah, I got you. No, I hear
All
you.
right, we're at the top of the hour, and Dave's going to get that little hook where he like hooks you off the stage, and he says you're out. So I'm going to go and just ask real quick, Dave and Mike. Let's start out with Mike. How do people get a hold of you, and do you have any special offers?
Thanks. No special offers this time, but you can catch me at smartoptionstrading.com or at Options Mike on X or Twitter, whatever you want to call it these days. And listen, you don't have to be a member, but love to have you. But I post tons of stuff for free on Twitter all the time, and I put free videos out nonstop. So love to have you, and thanks for having me on, guys.
Perfect. Thanks, Mike. And
Yeah, enjoyed
Dave,
it, Mike.
yeah, a little quick
You can
how to get a hold of you? Yeah, yeah.
Yeah, you can find me at davelandry.com. And if you want to get my books and check them out for free, davelandry.com/free book, free dash book, davelandry.com/free dash book. And my Twitter is T following moron. And you can follow me there. And I've been putting out a lot of content on Twitter, kind of like the "you are here" type of content lately about where we are in this bigger picture cycle of things. And I try to keep things simple. So read the books and you get a good idea. And also, just real quick, my YouTube channel, youtube.com/Dave Landry. I've got thousands of videos out there. So check them out and get to know me. And then if you like what you see, I'd love to have you as a client.
Perfect. As far as Option Professor is concerned, we've got a webinar tomorrow. So if you want to go to optionprofessor@gmail.com, you can sign up for that. And also, as far as those probabilities, I should tell you, I think it's 90% that the 60 is the high, and I think 90% 4,800 is the low. But if Navarro, Lutnick, and Trump decide to stick their guns, I'll be 100% wrong. But if they back off at all, I have no trouble with 4,800. I've been waiting for it ever since it was 6,100. So I'm not going to let that go and come. And the 60 on the RSI, I think we all agree, is a very high number. So it's great being with you guys. It's a fun day. And like I say, if you want to go to the seminar, optionprofessor.com. Dave and Mike, thanks a lot for the conversation. And we'll be talking again.
Thanks, guys.
Yeah, I really enjoyed it. Thank you so much. And thank you, Dave Cosminer.
Yeah. Yeah, I was ready to let you guys just keep talking. I wasn't going to cut you off. So so yeah, great discussion. Tons of good info. So thank you all for being here. And just reminder for everyone listening, be sure to subscribe to Timing Research on YouTube or your favorite podcast app to get the recordings. Also, you can just go to TimingResearch.com and get access to this recording as soon as I can get it posted, or any of the past recordings and presentations. Also, Timing Research is now on Substack. So if you used Substack, you can look Timing Research up there. And just want to close out by thanking my guests again for today: Mike Pisani of smartoptiontrading.com, Dave Landry of DaveLandry.com and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.